welcome to the firm. On the show this week, the Bombay High Court rules in favour of Vodafone, says the issuance of shares is not a taxable income. 2 steps forward and 1 step back. A recent Supreme Court order throws a public policy spanner in arbitration works. All right, let's start with the headline-grabbing story of the week. 3,200 crore rupees. Now, as amounts go, this is an unnoteworthy tax battle. After all, we've been spoiled by billion-dollar claims in this country. But this Vodafone victory is landmark for other reasons. And interestingly, it will seem sweeter to Shell, Essar, HSBC, StanChart, and over 20 other companies that are fighting similar battles with revenue. This week, the Bombay High Court ruled in favour of Vodafone in a transfer pricing case that involved the issue of shares to Vodafone's foreign parent. Now, revenue claimed that the shares had been undervalued. The difference amounted to a loan by the Indian company to its foreign parent, and that this international transaction was subject to transfer pricing norms. The revenue claimed tax on the difference in share value. Vodafone argued that a share issuance is a capital receipt and not an income subject to tax. And Vodafone won. The Bombay High Court ruled that there is no taxable income arising from such a share issuance transaction. Now, while we await the judgment fine print, there's no denying that this is good news for Vodafone and probably even better news for Shell, which is fighting a 15,000 crore rupee similar tax claim by the tax department. Joining me to discuss this momentous decision are Mohan Parasaran and Rahul Mitra. Gentlemen, to both of you a warm welcome. I'm going to plunge right into it, Rahul, by asking you first what you make of this decision and what kind of relief it will offer to the several other companies involved in similar such matters.
I think, Menaka, to start with, I think this decision, if not anything else, it brings back the confidence of the foreign investors of putting money into India. I think the adjustments which were made by the revenue officer had put a lot of doubt in the minds of foreign investors on whether they would their share capital would be subject to taxation. In fact, to put it very briefly, transfer pricing provisions are there to quantify income, but not to create an income. So any deficiency in terms of share issue, what the revenue said there was undervaluation, could have at least gone to swell up the share premium account, which could have never been taxed as income. So the ruling doesn't come as a surprise. It's a relief for foreign investors, and I think it will certainly go to improve the overall image of the company, of the country. Going forward.
Rahul, why do you say that this was an expected decision? Because from what I understand, at the DRP level, many of these cases, in fact, went against the assessees.
Sorry, that's the difference between the revenue and the judiciary. So if you can please read within the lines what I meant.
All right, fine. Okay, I get that. Mr. Parasaran, it's not just the number of similar cases involved here or even the amounts, which in the case of Shell is, seriously mind-boggling, a 15,000 crore rupee amount. It's the very fact that many tax experts in this country thought that India was becoming the first country in the world in attempting to tax a capital receipt. Therefore, would you agree, having represented government in the past, that what the Bombay High Court has ruled today is only fair and will help improve the investment image of India?
Yeah, I entirely agree, because see, now it will bring back the investors' confidence. And what I was seeing in my experience, actually the revenue had a very ingenious mind in taxing many transactions. And many transactions were in fact not on the face of it taxable, but insofar as this transaction is concerned, as Rahul pointed out, I think it's highly doubtful. But if you look at the statutory provisions, they look I think quite ambiguous, and that led to the taxing authorities to actually find out a way to issue show cause notices in the light of the ambiguity posed by the definition of an international transaction, even seeking to bring in even transactions like capital financing, and also by definition in section 92BE restructuring of a company was also sought to be taxed. Therefore, notional income of a company was also sought to be actually brought in the ambit of ALP, and that actually is not accepted generally in international tax jurisprudence.
Mr. Parasan, if I remember correctly, sir, when you were a lawyer to the government, in your earlier avatar, you did have to represent the government in some of these cases in the early stages in the Bombay High Court, especially before the matter had gone to the DRP. Did you find it difficult at that point to be convinced by the revenues case?
I did, in fact, as a Solicitor General, in my heart of hearts, I found it very difficult to defend. In fact, the Bombay High Court commented in the last round that the Solicitor General actually did not go into the merits of the matter. I argued on technicalities. But to be honest, I think I found there was some merit based on the ambiguous legal provisions, and that led to enormous litigation. But now the Bombay High Court's judgment will be an eye-opener, but we are now more concerned about bringing in foreign investments at this juncture.
All right, fair enough, sir, and that's a very candid response. I also want to ask you whether you think that this will broadly apply to the 20-odd cases or 20-odd companies that are fighting similar cases. The facts may vary minorly in each of these cases, but the principle at heart of each of these cases is almost the same. So do you think that this Bombay High Court decision that has gone in favor of Vodafone will give heart to companies like Shell, Essar, StanChart, HSBC that are all fighting similar matters?
This will, of course, be a trendsetter. Of course, Shell stands on a slightly different footing on facts. And this judgment, of course, will be the beginning and will be of a great use to all the other 20-odd cases.
I think we first need to see the judgment in its proper fine print to understand as to whether the principle should apply. But on first blush, I mean, without any of us having an opportunity to read the judgment, so I don't see any reason as to why the principles with the Bombay High Court would have enunciated in the Vodafone case, why the same should not apply to all the other cases.
So what happens from here on legally, Rahul? Because from what I understand from my colleagues who cover the Bombay High Court, that the Shell matter was likely to be heard next week. So, how does this proceed from here on if the Bombay High Court has already ruled in the Vodafone matter that such a capital receipt does not amount to a taxable event? Would they simply apply the same thing to Shell, or will Shell go through all the rigors of protracted hearings, etc., and then, arrive at a decision of sorts?
So I personally feel unless the facts of Shell or any of the other cases are significantly different, which once again as an outsider we don't feel they are, well, I don't think there will be too much of a detailed argument all over again to be done by Shell or any of the other companies. And the Bombay High Court should be applying the same principles in those other cases.
Mr. Parasaran, you indicated that you thought that the facts of Shell might be distinguished from this very case. So you think that those matters will have to go through protracted hearings before arriving at a decision, or do you think that principally the Bombay High Court will apply the same rationale to all those similar matters as well?
I don't think the High Court is going to blindly apply Vodafone, because facts would vary from case to case. But the underlying principles in Vodafone might greatly help Shell as well. And there I think it was a case of business restructuring. But all this, I think the jurisprudence is the same, no? And we'll have to see. I think the revenue might again bring in the concept of actually base erosion and profit shifting. If those things come in, I think the matter will be argued for some time. But I think the hearing may not be as detailed as one would have thought originally.
I think what the interesting point would be, or the fulcrum of the judgment would be, the devoid of the other or peculiar unique facts which any of the other cases might have. If the underlying transaction, which is the subject matter of dispute, is undervaluation of shares, and if you shed all the other facts or all the other issues that might be involved, as Mr. Parasharan was saying, that there could be some business restructuring or whatever it is, and which none of us are really privy to. So to the extent the issue is broadly on the undervaluation of the issue of shares, then the principles of Bombay High Court should apply. I think this is something which we really need to see as to what the Bombay High Court really said on the basic issue of undervaluation of shares vis-a-vis the applicability of transfer pricing on a particular item of not a notional income, because in transfer pricing, you know, you also tax a notional income, or let's say an excessive expenditure. But the important thing is which could never have been considered to be a taxable income in the first instance, whether can it at all be taxed. So I think those underlying principles are the most important thing which one would like to read from the Bombay High Court ruling.
All right, we'll be waiting to read that fine print through the weekend. Mr. Parasaran, you know, one issue is whether this can apply uniformly across all companies that are involved in similar matters. The other issue is that this is not necessarily the last word said in this battle. Revenue could very well choose to appeal this decision in the Supreme Court. Now, many of the tax experts I've spoken to through the day, you know, believe or would like to believe that given the stance that this new Prime Minister and his Finance Minister have taken to make India a more tax-friendly investment destination, they are hopeful that revenue will not agitate this further. What is your point of view, sir, on this?
But what I feel is the very fact that this government did actually send its own Solicitor General to fight out this case quite, I think, forcefully before the Bombay High Court. I think the department also will be quite keen to take it up to the Supreme Court. And this matter definitely involves a substantial question of law, according to the revenue. And therefore, I think this matter, will be taken up in appeal up to the Supreme Court.
You also did mention...
And this is all the more because of the fact that I think the government did not micromanage, as I said earlier, these particular provisions either during the budget, nor has the Finance Minister or the government have made any comments qua these provisions at any point of time.
All right, fine. Gentlemen, I appreciate you joining us this evening, despite the fact that we don't have the fine print of the judgment to analyze this any further. Thank you very much for your time, and thank you for those quick takes on this very big decision by the Bombay High Court. With that, we're going to slip into a quick break on the firm. When we come back, 2 steps forward and 1 step back. A recent Supreme Court order throws a public policy spanner in arbitration works.